you will be like mentioning about the project budgets and stuff. So it is really important that you all have a thorough understanding about what is happening on each and every project as well. And one thing that you should actually keep in mind is that, like I said, the president will be the person who will be accountable for entire thing. And let's say that if you say like there are certain deadlines regarding the finances, which we have included in the citations as well. So let's say that you miss one such deadline, right? So in that case, it's not that the president or the secretary or the treasurer will get penalized. It's the entire club that is getting penalized. No one will say like, yes, if from the club's perspective, someone can argue that, yes, this happened in the last year under this person's presidency. However, when it comes to the district perspective, for us, it's actually the club. So whatever the penalty that you will be getting is not on to your like the president's account. It's actually going under the club's name. Maybe the good standing status or maybe a debit note, whatever it is, it will be always addressed to the club. So that's why you should make sure that you have to like you give your 100% to make sure the club administration and the club finances run smoothly, so that you can pass it down to the next year people as well. So moving on.
Yeah, so then club bank account. So when it's come to maintaining a bank account, so we recommend to maintain 2 separate bank accounts for projects and club administration purposes. So if club decided to maintain one bank account, it's mandatory to maintain separate books for project and admin account. So here maybe some of you wonder what are the what is the project account and what is the admin account. So here all the funds related to club administration purposes like meeting expenses, membership dues, then district dues, and also website hosting fees. Likewise, all those funds goes to under club administration. So all those funds should recorded under admin account, and the funds related to project should record under the project account. So here you can't move funds from the project account to admin account, and also funds from admin account to project account as well. Then when maintaining bank accounts, we recommend to always utilize the current accounts as the bank account. And when using checkbooks, club should use the official club stamp and also the authorized signatories as well. Yeah, so when it comes to signatories of the club bank account, signatories should transfer before the 31st of August, and after completing this, clubs have to send an email and confirm that to the district treasury team as well. Moving on.
Yeah. So when it comes to the club membership fees, actually the clubs are encouraged to collect a membership fee. However, make sure that the specific amount that you are collecting for a year is recorded in your club bylaws, and you are getting that club bylaws approved by the majority of your club, which is the quorum. And also, the club bylaws should also get signed by the Rotary president as well. So make sure that whatever the amount that you are collecting, that you are recording it in the club bylaws. And also, whatever the membership fee amount that you are getting from the club members, definitely this is really, really important for the transparency. It's mandatory to issue and receive for any amount that you are getting to the club account. And also utilization of the membership fees would be like membership fees, something which is related to administration, right? So when we are utilizing it also, you can only use it for the purposes related to the club administration plus for the payment of the RI dues.
Yeah. So when it comes to district dues, so for this year, district dues amount will be 4,000 rupees, and clubs have to complete the payment before the 31st of October. And if any club fail to complete the payment before the deadline, then club will have extended deadline till the 31st of December, but club will have to pay a penalty of 50% of the annual district dues. That means additional 2,000 rupees. So we recommend to Eric up to complete the payment before the 31st of October, so you don't have to pay any penalty. And then if any club fail to complete the payment within the extended deadline, then that will result to losing the good standing status. So that means clubs will lose to eligibility for district citations and also voting and elections as well. Moving on.
Yeah. So when it comes to the receipts and project bills, actually, like we would recommend you guys to maintain separate drive folders so that you can properly maintain the records, because like the hard copies can get misplaced, right? So when you have like maintain a drive folder, then you have actually backup so that you can like produce that drive folders to the audit as well. So whatever the, like I previously said, whatever the payments that you are getting, you should issue a receipt from your receipt book if you have a hard copy, or otherwise you can opt out to sending e-receipts as well. And also when it comes to the bills, never like transfer the let's say you have to pay for something, and for the sake of transferring the money, even if it's an emergency, don't do that. Always make sure that you have a proof, or even if you can't get a bill, just get a letter from that respective person whom we are giving the cash or the transferring the amount to, so that from your point of view, the club has maintained the transparency when it comes to the expenses. And moving on.
Yeah. So from this year onwards, clubs have to submit the monthly financial statement. So here we recommend to all clubs to maintain proper financial records and keep them up to date at monthly. So you don't have to worry about finding what are the transactions happened at the beginning of the year when you are preparing for the audit. So, and also when it comes to monthly financial statements, clubs have to submit a statement of financial position and statement of income and expenditure for the each month at, on or before the 10th of the following month to the RMIS portal. Moving on.
Yeah. Before I move on, am I audible enough? I think my line is breaking.
Yes, you are. Loud and clear.
Okay, cool. Okay, so like our RI membership dues, I think that's the hot topic that is getting discussed over and over again. So like when it comes to the amount, so even like even in this year, as far as up to now, the per member rate hasn't changed. So for instate-based clubs, the clubs will have to pay $5 per member, and for community-based and corporate-based clubs, you will have to pay $8 per member. And for this, actually, there's no direct involvement from the Rotaract district, because the invoice will be sent out to you all for the clubs through the Rotary International itself. And the membership count that they are looking at is the members that you have registered in your My Rotary portal. So make sure that you keep your My Rotary portal membership up to date as well. And you know that, like, from the the clubs had to pay for the first invoice starting from this year, right? So which means that going forward also you will have to pay the same amount. So right from the beginning, make sure that you have strategies or any backup plans in place to collect that membership due, because it's something that you will definitely have to pay. So in order to avoid last minute hassle or the hardships or the struggles that you have to go through, make sure that you have action plans in place, so it will not burden you when the invoice is there.
Moving on to the audited accounts for the year 2022-23. So probably all of you are currently working on this. So all clubs have to submit the audited account for the year 2022-23 on or before the 31st of August, and accounts must be audited by a qualified auditor, and the audited account should be approved by the sponsoring Rotary Club president or the treasurer. Moving on.
Yeah, so and that like the audit accounts for the last year will have to be submitted to the district by the end of August. So likewise, audited accounts for the year 23-24, again, you will have to appoint an auditor for your year on or before 30th of April 2024, which is next year. And before the audit, make sure that you always share the financial guidelines that you are following in your club with the auditor itself as well, so that they can also go through them and familiarize into those financial guidelines. And the audited accounts for the year, it is recommended that you include the details that is mentioned in the presentation itself, namely the details of the Rotaract Club and the membership fees, and also the RI membership dues account, project account summary, admin account summary, and the statement of income and expenditure, statement of financial position, bank reconciliation, and the summary of receivables and payables. Actually, this will be easier for you guys this year, because anyways we will have to maintain the monthly accounts, because that's the reason that we have introduced it also, so that it will smoothen the audit process of the club for this year. And one small thing which I want to highlight once again is that, at the beginning of the session, I told that the final responsibility will lie with the president, right? So some of the common issues or concerns that we have come across during this couple of weeks is that the clubs are getting back to us, mentioning that their treasurers have resigned, so they don't have records or bills or whatever it is. So one thing we want to highlight is that you can't be saying that, because at the end of the day, it's not the sole responsibility of the treasurer. It's something the president, the secretary, even the executive committee have to overlook on. So always make sure that even it's fine, even the executive committee make sure that everyone is aware of what is happening with the finances. Okay, moving on.
So yeah, so that's the main facts you all have to aware about the club finance management. So to sum up the deadlines, so before the with the year plan submission, you will have to submit the annual budget along with it. And before the 31st of August, you'll have to submit the audited accounts and also complete the signatory terms of the club bank account. And then before 31st of October, clubs have to complete the payment of district dues. If clubs fail to do that before the deadline, then club will have extended deadline till the 31st of December, and clubs will have to pay additional penalty as well. And before the within the month of June, along with the annual report, clubs have to submit the unaudited accounts, and at the end of the RI year 2023-24, clubs have to submit the account for the audit as well. So apart from that, clubs have to submit monthly finance reports to the RMI portal. So for that, we will share in the recommended format with you all, and also to maintain finance records, we will also sharing recommended format as well. So apart from these, once we share the handbook, you all can go through that and get more idea about the financial management. So let's move on how to maintain financial records. So over to you, Dr. Prosperous and Metmini.
Hi guys, am I audible?
Yes, Metmini.
Great. Right, so I'm basically here to let you all know how not to go to jail because you didn't do your accounts properly. Right, so as Rotaract, Reshaka and Rotaract Vinuri took you through basically about the deadlines and whatnot. So I'm going to basically give you guys, it's going to be a accounts crash course. So please bear with me. If I'm going too fast, drop a message on the chat box. I tend to talk too fast. So yeah, and so while I'm going through the templates with you all, make sure to send in your questions. Because if you wait till the end, I'm pretty sure you'll forget the questions and you'll forget what accounts are and what debits and credits and all that. So make sure as soon as you have the question, send the question in the chat box, and I will check the chat box at the end of every template. So to clarify any doubts that y'all have. Right, I'm going to switch off my video because I don't trust my laptop. Okay. Right. Okay. Right. Okay, so there are a couple of templates. So before we start going through the templates,
excuse me,
yeah,
can you zoom out a little bit?
Zoom out. Okay, let's do this. Is
maybe 90?
Is that, can you?
Yeah, go ahead. Yeah, go ahead. Yeah.
Yeah, okay. Can I do this? Okay, right. So there are a few terms that you need to know, especially when it comes to accounting. So I'm just going to take you guys through the terms, because so the formats, I'll just briefly show you all the formats. It's basically like filling a form, but if you don't know the terms, it's like you're trying to fill a form in a language that you don't know. So you basically don't know what you're going to have to write. So yeah, so there are a few terms. So I'm pretty sure what income is. So it says all forms of financial benefit received from a transaction. So in case of Rotaract, it could be donations, sponsorship, sponsorships, etc. Right? So that's your incomes. And it comes to expenditure. So if you guys have a project, then I don't know, depends on the project, buying food, buying drinks, buying decorative materials, blah, blah, blah. Those are your expenses. Then there's something called receivables. Receivables is, so say you guys have a project going on and you're issuing tickets. Receivables is when you issue a ticket, but someone hasn't paid it yet. The project has ended, but by the time the project has ended, this person hasn't paid you yet. So it's money that is yet for you, money that is yet to be collected. It still has to come, right? So you don't have the cash in hand yet, that person has to pay. So that is a receivable, amounts that the club is due to receive. Payables is the opposite of that, is when you have to pay someone else. Your project has ended, you had gotten something, but you haven't paid for it yet. So you're yet to pay for it. So that's payables, right? Then you have a deficit. So in terms of, so when it comes to non-profit organizations, they're not technically non-profit organizations are not to, they're not supposed to make profits. So if they have money in excess at the end of the year, then it's called a surplus. If they have somehow managed to go into, like, you know, they've run out of money and then now they're basically running on loans, then that becomes a deficit. So in other words, deficit would be a loss while surplus would be a profit. Then you have net cash flow. So like I said, there are receivables and payables, but net cash flow is how much money actually went out and how much money that you got, like physical money. So say you have a drawer full of cash and you take money out and you put money in, blah, blah, blah. And at the end of the project, now, if you are yet to receive money, obviously that money is not going to be in that drawer. And if you're yet to pay someone, then that money hasn't gone out of the drawer. So how much money is in that drawer? That would be the net cash. Yeah, that will also be either surplus or deficit, but net cash flow is how much money actually went out for now and how much money have you actually got in, right? Right. Here's me hoping no, don't have questions yet. Okay. Then individual project accounts, obviously, I'll take you guys through that. And now these are a bit, yes. So there's something, yeah, I'll get to this when we get to that format, otherwise you'll be confused. Okay, so the first format. So this is this visible or do you all need me to increase the Reshaka? Shall I increase? Is this okay?
Yeah.
Okay. Right. Yeah. So this is the recommended format for your individual projects. So in this, so you have a couple of things to fill. There's something called, so this part is the summary. So we'll get to that once we're done with these two. So let's look at this. So we'll so you have your expenditures, incomes, receivables, like I mentioned before, and payables. So if we take a project as an example, so I'll take the one that you guys are most excitedly waiting for to celebrate, your installation ceremonies, right? So you're going to have many expenditures, many incomes, and receivables, payables, well, we'll see, right? So for an installation, you will get sponsors, you will have souvenirs with, you know, where you're asking other people to buy advertisements, as in buy slots to show the advertisements, blah, blah, blah. So those will be your incomes. So say for a souvenir advertisement, right? So say this person took one page and that's 1,000, right? So that's one income. But now, and then say there's another sponsor, right? Sponsor, let's see, 100,000. Yeah. Now, usually sponsors don't give money before the end of the event. They usually, I mean, in most cases, they'll give you money after the event. But you know for sure that they will pay you money. But now the project has ended and you have to submit accounts or whatever. So for that, for now, you haven't gotten the money. but it's definitely going to come and it's an income. So you mention sponsors as an income here because it's certain it's going to come, but it is yet to come. They haven't sent the money yet. You're yet to get the money. So because of that, it's a receivable, right? So then you put sponsor, pretty sure that it will come. So 100,000, right? So you put it on that side. Now let's say you got I don't know, glassware and ceramics for whoever for like I don't know 700 rupees. Yeah, so you got that, but you didn't pay for them yet, right? You got them, you will pay for them after the end of your event, few days after, whatever. So you have gotten this, them, rented it, and you will pay only afterwards. So if that's the case, this is an expenditure and it's a payment that you have to make eventually, right after the event. So if the event's ended and you still haven't paid for it, then it becomes a payable. Not becomes, but it's something like a liability. This is something that you have to pay eventually. So then you put it here because it's a payable, right? So you put it here. Then, but if it's an expense that you have already paid for, say you bought flowers for the podium, you have to pay then and there. Then flowers, say 5,000, of course. Yeah, and so you don't have to put anything here on this. This part is all money that hasn't come yet or the money that hasn't gone out yet. We have one question quickly. Is it okay? Sorry. Oh no. All right. Okay, how do I do this? Okay. Right. Oh dear God. Right. Is it a must to use the recommended format for individual project accounts? Can't we use separate ledger, which are the same aspect but in a different format? That I'll direct to the treasurers. Reshaka, I think this should be for you all. So the question is, sorry?
Yeah, can you share the question?
Yeah, so the question is it a must to use the recommended format for individual project accounts? Can't we use a separate ledger to maintain project accounts which satisfy the same aspect but in a different format?
Yeah, it's okay as long as it follow the basic financial structures. So I think as they mentioned, they are following those, so that's okay. If you need to verify that, you could share those format with us, and then we can go through them and give you a proper answer.
Yeah, so it's okay for now. So the thing is that the treasurers have basically designed these formats for it to be easier for you all when it comes to your audit. So it's very clear for the auditor, and it's also actually kind of easier. But like Reshaka said, if you all want to get your formats clarified or adjusted or whatever, you can always reach out to the treasurers. Right, back to our installation. Yeah. So now we have glassware, flowers, so advertisements and sponsors, blah, blah, blah. And now we take the totals of whatever. So on this, okay, we have these, right? And then here, okay, it's easier for me to just type it out, right? Okay. And okay, so I put totals everywhere. So you have 700 in total for payables, 100,000 rupees in total for receivables, meaning, so this basically means you have to let 700 rupees out from your drawer, and then 100,000 will come into your drawer. And then you have 101,000 in income for installation, while your expenses are only 5,700. Now after this part, we go to the summary. Okay, so project surplus or deficit, meaning have you made a profit or is it a loss? So to calculate that, you have to do, which is, I'm pretty sure this is obvious. So basically, you have to deduct the expenditure from your income, right? Income minus expenditure. So A minus B, and you get your surplus. So in this case, it's okay, because I'm too lazy. Okay. Yeah, 95,300 is your surplus. While project receivables, which we calculated here, it's 100,000. And your project payables will be 700,000. Right. And this is the formula to get the final value. So A minus B minus C, yeah. So basically A minus B minus, this is, yeah, I'm gonna show it to you rather than otherwise. Okay. So 101,000 minus 5,500 minus 1,100 in, and then plus, wait, I think, yeah. Wait, I'm sorry. Yeah, someone raised their hand. Please. Can we remove the payable? Sorry. Yes, thank you for asking that question. Yeah, so Aman had asked, once we settle a payment, can we remove the payable? Yeah, so once, if you guys have gotten the money, then you can remove it. So once you get the money from the sponsor, you can remove it from here. Once you have made the payment to the glassware people, you can remove it from here, right? So in this, so this is asking about the net cash inflow and outflow, meaning how much cash do you actually have? How much cash has actually left? So to calculate this, so you have your net surplus and deficit. Now that 95,300 actually includes the sponsorship that you never got yet as well, right? So far that money hasn't come to you. So from that, so obviously you have to deduct few things and blah, blah, blah. So let me just put so this is A, which is your income, and B, which is your expenditure, and you minus C. You minus C because that money you haven't gotten yet. So you can't actually add it to the cash flows. So you deduct the 100,000 while you add the payables. You add it because that money has not left yet. As in, you haven't made that payment yet. That 700 is still with you. So you add it to get the final value. So then your final amount should be 95,000. Right, okay, sounds like someone's partying. Yeah, we're gonna do the math here. Okay, and then plus 700. So you have actually no money in your drawer, basically. So you are negative 4,000. So you have actually, since you don't have money, you have actually somehow either taken from a previous amount or whatever. So you have more cash outflows than there are inflows, right? So you have a negative 4,000, right? But once your sponsorship comes and whatnot, it will all be sorted. So any questions for this section? Okay, so there's one more. Yeah. Sponsor confirmed, then they come under receivables. Project was submitted to our portal. Later, sponsor say can't for some reason. Where does it get recorded? Project will show profit in our records submitted, but no cash in hand. So I'm assuming, yeah, you all are saying that in the monthly financial reports and your project reports, you've mentioned that there will be a sponsor whose money you're yet to receive, but later on they say that you won't be getting the money. Yeah, so in that, so this is very accounting, but yeah, so there's something called bad debts, DEBTS. Yeah, bad debts. So in the case where you have a receivable or someone who has said that they'll give you money, so you have listed it down as money to come, so meaning receivable. The sponsor had said we'll definitely give you money, but at some point in time they're like, okay, no, we're not gonna, we don't have money, we can't give you any money. So in that, it actually comes under something called bad debts. So usually it's listed under well, it will be like an expense because you've made an income, but now it doesn't happen. So in this case, you can just remove it from, you have to remove it from your receivables and from your income. But from your income. So it's like this, whatever you submit to your project reports, that's not the final accounts, right? It's basically like a basic financial draft. That's not going to be the final, but your final accounts will be the ones that you submit to the auditors. That's your final one. Even for the annual report, those are draft accounts. So it's called draft. It's not the final, it's the draft. During which, so you submit your annual report. Your annual report will only have accounts from 1st of July to 30th of May. But your audit will have 1st of July to 30th of June. So that's why even in the annual report, those accounts are drafts, because in that 1 month, so many things can happen to change your accounts, right? So in that, so when you're making your final accounts, make sure to make the proper adjustments. So in the final accounts, if you make those adjustments, it's fine. But if you reported as that in your project reports, then we're not going to hold you responsible just because your sponsor back down. So you can make that adjustment. So what you can do is in your annual report, if you want, you can put a note saying that in the project report or in the monthly report, we mentioned that there will be a sponsor so and so, but blah, 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 they drop down. And if you want like put supporting documents, you can attach the email or a letter or whatever, saying that they promise this amount and then later on they backed out or whatever. Something like that. Are there any questions? Any other questions? District format doesn't carry a column for bad debt. Not really, because bad debts, it's usually when your debts go beyond like more than a year. So, in that situation, it's not very practical for a Rotaract club that has like, the president only is there for 1 year and the treasurers change every year. Bad debts are not that common, is what I would say. But yeah, district format doesn't carry a column for bad debt. Any other questions for this section?
Adding to that, if any clubs have bad debts, then they have to have separate account for accounts and bad debts account. So in that account, you could mention that accordingly.
Yeah. You can, so guys, this is the recommended format, not mandatory. So meaning that you can make the adjustments based on your club's accounts and whatever the situation is with that particular project account.
Yeah, these are only the basic accounts that you have to work throughout the year, and accordingly you could have add any other accounts.
Right, since I don't think there are any more questions for that section, so we are moving on to the second one, which is the project account summary. So this is basically what you will be put, it's basically the summary, including all the projects that have happened in your year and whether it made a surplus or a deficit. Again, did it make a profit or was it a loss? So, installation, you can put installation ceremony, and then the avenue is club service, and then you guys made a profit of 100,000. Okay, and then another project, which is professional development. Oh my God, I just can type PD. Yeah, PD, and let's say it made a loss of 10,000. Right, so that you will put as a negative amount, right, and so on and so forth. And then you come to the net project surplus or deficit for the year. So that is basically the sum of all these values, right? So you get the total here. Then there's something that says surplus deficit brought forward from 2022 to 2023, which is also known as the opening balance. So opening balance is, remember I told you guys about the drawer. So on the 1st of July, when you open the drawer, how much money did you have? That would be your opening balance. Your previous president has put the money in the drawer and they have gone. And when you open the drawer on the 1st of July, how much money does it have? That's your opening balance, right? And your closing balance is how much money are you leaving behind for the next president? Are you planning on taking all the money and going away? Or are you planning on keeping like 10 rupees or whatever for that person to do whatever? Yeah. So your closing balance would be that whatever amount you're leaving behind. So in this, it says E plus F. Yeah, so opening balance, and basically that opening balance you will be using in your year for the whatever first projects that you do, project or administrative expenses. So you'll be using it throughout your year. So E plus F is your closing balance. So in this is the project summary. So you will probably use it for something, say installation ceremony, saying that's your first project for the year. So you'll be using this opening balance to fund that. So that opening balance plus whatever money that you have made in your year, whatever money that you have made or whatever money you have lost in that year. So that plus this, you get your closing balance. That means overall, how much are you keeping behind? Or if the drawer is empty and they actually owe you money or something like that. There's one, okay, no, that's not a question. Okay, all right. Any questions for this part? Going once, going twice. Okay, I'm gonna move on to the next part and we'll come back if you all have questions. And oh no, the most dreaded part for the year. Yes, RI membership due for the year. So basically, so this is going to be easy, if anything. Not easy, but yeah, of course. So yeah, membership dues collected will be considered an income. That's cash coming in. And it's like Vinuri and Reshaka said, for you guys to have a proper plan and a backup to how you're going to fund this. What are you planning on, like a backup fundraisers and all of that. If you have fundraisers very specifically to pay off your RI membership dues, then the income you get from the fundraisers are recorded here. Membership dues collected, so the whatever that you're getting from your membership, from your members, sorry. That will also be listed here, and whatever other administrative related incomes will be recorded here. And then here is where you record how much you have paid. Now on the 1st or 2nd of January, you will be getting, somewhere in January, you will be sent the invoice saying you have this many members, you have to pay this much, blah, blah, blah. So that payment that you make, you put it here. Right, for the opening cash, for the brought forward profit or loss, might not be the same. Yeah. Okay, so we have a question. Are we supposed to record the opening cash or the brought forward profit loss? Because it might not be the same if we have receivables and payables. So that your opening balance, that depends on where you're recording at that point. So if you take the project account summary, for this, your opening balance would be the balance that's there in your project accounts, very specifically. So irrespective of whether there are receivables or payables or whatever, that amount that you are getting from the previous year. So imagine you have payables from the previous year, you will be getting those also. If there are receivables, you will be those will be forwarded to you as well. And then those receivables you will be received in your year. So it's not cash that you record here, it will be the profit or loss, or basically the balance. Okay, going back to RI membership dues. Sorry about that. Yeah. So whatever RI membership due you pay for the year will be recorded here. Now, the thing is, as you might or might not know, so the RI billing cycle is actually from January. Oh no. Okay, never mind. Right. Never mind. Sorry, I'm a bit slow today. Right. Oh, so their membership, RI due billing cycle is from Jan to December, right? While our Rotaract year goes from July to June, right? So we kind of have a problem there because yeah, so you will only be responsible for this part. Well, there's this part and then there's this part. It's well, yeah. So in your year, so that starting in July. So I hope this that you already have been told that RI dues are paid in advance. So say now take this year meaning on the in January you guys were billed, right? You guys were invoiced for whatever members that you all had, you all were asked to pay. And you made that payment. That payment was from Jan 2023 to December 2023. So it's like getting a library membership. You pay the membership amount when you get that card. After that only you can use the library. You can't use the library without paying it. So it's something like that, right? If you want the benefits of Rotary and Rotaract, then you have to pay first, right? Except that their billing cycle starts in January. So for now, if you think about it, you have already paid till end of December. So the next billing cycle starts, from next year Jan, right? So the money that you're collecting now from your members and so on will be for the next year, for 2024, from January 2024 to December 2024, right? I hope you all are still there with me. Yeah, so technically, so now say let's take this as January 2024 and this is December 2024. So from here to here is what's relevant to you. Right now, the previous year have already been paid. Currently you're collecting money for this entire thing. But what's relevant for you is only this. So in the expenditure and income, you report that. When I say that, the income that's relevant for these 6 months and the year before. That means whatever RI dues that's relevant from 1st of July to the 30th of June, right? Pretty sure. So basically published with RI dues. Yeah. Wait, yeah, so the club has to, you guys will be invoiced in Jan. You have to pay somewhere in March, before March, that is, as soon as possible. You will have to pay your dues. If not, your club will get terminated by Rotary. So I'm scaring you, which is true, by the way. Yeah, so the thing with expenditure and income, this table, it only considers incomes and expenditures that are relevant for your year, that is July 2023 to June 2024. That's it. It will take nothing that comes anywhere outside of that, right? So even if the payments haven't been made, it will be considered, right? So even receivables and payables, they still have to be included in this because those payments are relevant to your year, whatever payments that are relevant to your year. Right, so yeah, honestly, hope I'm making sense. All right, okay, we have questions. Oh dear. Okay, should we have to make a monthly provision for RI dues due to the introduced pro rata basis system? If it is yes, what USD rate should we use to make the provision? Project was to pay RI dues. Once the cash was received, project says profit. Once the RI due is paid, cash in hand will be less. How does the recording part go for that? Okay. Yes. What if the member count is different for the previous president and the next president? How do you pay the accurate amount? Okay. So yeah, okay, let me answer this question first. So the question is, what if the member count is different for the previous president and the new president? How do you pay the accurate amount in dues for the members? So for that, so basically RI will be letting you all know how much you have to pay, right? They will decide on the currency rate and they will let you all know how much to pay. So there's not you all don't have to figure it out on your own, but do check. So like on the day you get the invoice, just check if they've invoiced you correctly, as in for the correct number of members. So they will send you the invoice. So say on the 31st of December is when they start the invoice. Okay. So however many members you had on the 31st of December, they will basically charge the RI due for all of them. So they charge it thinking, so they assume all of these members will be continuing to next year. So if you all want to continue Rotaract in the next year, we don't care if you all leave in the middle of it. If you all want to continue, you have to pay now. So you have to pay in advance. Right. So on the 31st of December, say you had 25 members in your club. Okay, so all of those 25 members will be invoiced in the invoice that you get in January. So those 25 members, the Rotary assumes, okay, they are going to continue next year also. So you all have to pay if you all want to stay in Rotaract, right? So now say there will be new members joining. So now they join in the middle of next year. So when they pay their dues the year after, okay, I'll take here. So yeah, so there is a member who joined oh my gosh, wait, okay, so assume the previous December I mentioned was December 31st, right? And then you pay you get your invoice on in 2024 Jan. So 31st. Oh good Lord. Right. Oh, 31st December. And then you have this is of 2023. And then you have January 2024. Right. So this is you had 25 members in your club. And then in January, you get the invoice for 25 members, which is Rotary's assumption that all of these 25 members will continue Rotaract in 2024 throughout. Okay, that's the assumption. But between July and yeah, between, it doesn't have to be July. Okay, so between Jan and December, there will be new members joining. So in July, it will be 30 members, and by let's say August, August 2024, August, it will be 35 members, and so on. So this increase that happened, so let's say by December, it's only it's 36. Okay. So in December, on the 31st of December 2024, it's 36 members, and on the 30th, in Jan 2025, you will be invoiced, you will be sent an invoice asking for you to pay RI dues for 36 members, 36 members, but this increase that happened, right? Now you initially only paid for 25 members, and between that 1 year, you have increased, 11 members have joined. Now they have joined in various months in the year. Like this is where your pro rata comes into action. Now say this now this 5 members that are there in July. So say all of them joined on the 1st of July. right? These extra 5 members, they all joined in 1st of July, right? So when it comes to this invoice, those 5 members will be charged from the due for the year 2025 plus these 6 months as well, because they were in Rotaract. The pro rata only applies for new members, and that is people who are extremely new to Rotaract, as in brand new. They weren't in a club before, they weren't transferring, as in immediate transfers. Now, if they were not active for a while and they had joined again, then they obviously wouldn't get the due. But say that there's a Rotaract from an institute-based club moving to a community-based club after done with the uni, like immediately. So they won't have their pro rata applied to them, but in the club's accounts, so that person will have to pay the previous club for however long they were in that club, and then to the new club for however long they were in the new club, right? So yeah, so these members who eventually join, they will have to pay for however long they were in the club in the previous year, because they weren't there in this club, or they weren't there in Rotaract in Jan to make the payment. You all have any questions? If I have lost y'all, I am very sorry. Not blame me. Yeah, so basically this format is very straightforward. Whatever membership dues you collect, and then whatever membership dues that you send out to Rotary. Now, yeah, oh, there was someone who asked about vision. Okay, so project, okay, there was one question. Project was to pay RI dues. Once the cash received, project says profit. Once the RI due is paid, cash in hand will be less. How does, okay. So in this, so what they're saying is they do a project to basically fund RI dues. They do a project, and then, so obviously they get cash. So when you do this project and you get that cash, it will be recorded in income, right? It will be here. So so basically this is a double entry. So you, in your cash book, you will record it as cash as well. The cash income, you will be recording it in your cash book as well, right? And you will be recording it here. And then the RI due payment is done. You will be recording it here, and it will be you will have to deduct it from your cash as well, right? So it goes here, and from your cash book, you deduct it. So basically, for me to explain it further, you need to have proper debit credit knowledge in accounts. So what I'm trying to do is basically teach a whole lot of accounts in a few minutes actually. But yeah, I hope you understand, but y'all are free to bug us as much as y'all want. Yeah, probably, yeah, bug us please, because we don't want you guys to be confused and you guys to not have an idea as to how you're feeling this. So you can always ask questions, and any questions you want, and don't think that any of your questions are stupid. All of your questions are valid, and it's completely understandable, because most of us are not from accounting backgrounds, and so it's totally fine for you all to have any kind of questions. Okay, so there's another one. Should we have to make a monthly provision for RI dues due to the introduced pro rata basis system? Provision. Yeah, that I'm going to leave for a bit, because that is also kind of a big topic. The pro rata, only if you guys have like new members coming. If you have new members, then obviously you should start adding that to your RI membership due, because once they join, as soon as, so say they join in the middle of the year, so say they join in August, so when they join, get the membership due from them. The membership due that's for August to December, get that part from them. And then eventually for the latter part, as in whatever the due that is applied for them in the year after. When it comes to USD, I would suggest that you take an average rate because the currency rate changes all the time. And anyway, the rate is decided by Rotary. So whatever, basically take an average rate that's there for that month if you're going to make a provision for that. Right. Okay. So administration account summary, again, very, very simple. So basically for administration, the only things that you can spend on basically any your expenses that go into your general meetings, those would be administrative accounts. For as in the venue, any printing, any photocopying, banners, badges, etc. Etc. Those will be mentioned in your administrative account. So this will have your call it, yeah, the summary. This is a summary. So in this, it could be administrative. So the club banners. Okay, and then you have club membership dues. Okay, and sorry, dues, and then you have RI dues. Right? And if you have a blog, and then what do you call it? Domain payments for the blog, etc. All of those will be your administrative accounts. And again, the same as before, and you get the net surplus or deficit if you have a surplus or deficit. And then you have how much did you have when you started your year to how much, and then you add these two together and you will get how much you're leaving behind, if any. Right. There's one question. Member dues, if RI and club account can't have it. Right. Okay. So Reshaka, there's a question. Reshaka or Vinuri. So in this, they've asked membership. So in the RI membership dues account, Reshaka or Vinuri, whoever's there. If you're alive, make a sound.
Yeah, go ahead.
Yeah. So in the RI membership dues account, do you want them to record the club membership dues as well? Or do you expect them to like add it together and or something like that?
No, that's only the RI membership dues. Like Yasmin explains before, since there is a USD fluctuations when you are paying the RI membership dues, there would be a additional amount you decide you collected for the RI dues, or there could be not sufficient funds. So by recording RI due amount separately, you could identify whether there is a additional amount or you don't have sufficient one. So that's it.
Yeah. So, for membership dues, they can have a separate format, no? Separate them. Yeah. So basically the same thing, but keep your membership dues separate since RI membership dues is complicated on its own. You don't want
so both these RI due amount and the membership due amount will also record in the admin account summary. So you could keep the separate account for club membership dues as well.
Yeah. So like this, you will have a separate one of those templates for club membership dues and separate one for RI dues. Right. Are there any more questions? Okay, I hope that clarifies the question. I mean, I hope you received your answer. Okay, so statement of income and expenditure. So like so in accounts, there's this something, there are many concepts. There are a lot of weird concepts. And one of them is something called the accruals concept, which is basically saying in the income and expenditure statement where you record everything, all the incomes that you've got, all the expenses that you've made. In this table, irrespective of the fact whether you've actually received that income or if you've actually made that payment, if it's something that has to be received or paid in that particular year, you have to mention it in this table, right? For example, like I said, the sponsor thing. So say you have a project at the end of your year, and there's a sponsor who has said that they'll give you money. So you mentioned it under in income. So total project income in this part. Okay. So you've mentioned them, you've included them also as a sponsor who's, promised the money and blah, blah, blah. So that's an income, right? But you haven't gotten the money yet. But it doesn't matter, because that sponsorship was for a project that took place in your year. You put it here, irrespective of the fact whether you have gotten money or whether you might not get money at all. You still put it here under income because it's relevant to your year, right? So this is not about whether how much you owe someone else or how much they owe you. This is about incomes and expenses. How much you paid or you're supposed to pay, and how much you've gotten or how much you are supposed to get, right? So club dues income, that is basically when you collect club dues from your members, you put your amount. So notes are usually, your supporting documents. If you have any receipts or bills or whatever, so basically put a tag on that, and whatever number or label you give it, you put the note here, right? Total project income. So like that project summary that we have, project account summary, net project surplus or deficit for the year, this E goes on this here, right? Because that includes the basically the sum of all the surpluses and the deficits, very specifically relevant to the projects that happened in your year. And then you have other administration income. Basically, if you've done fundraisers to, for administrative purposes and stuff like that, or if there's a donation or blah, 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 for administrative purposes, then you mention those incomes here, irrespective of the fact whether you gotten that money. If you've even seen that money, it doesn't matter. You put it there because that income was supposed to come in your year, right? So then you add them all together and you get the total, right? Then you put your expenditure, total project expenses, from flowers to glasswares to whatever that you plan on printing, to passages, to food, to drinks, blah, blah, blah. All your project expenses will be here. Again, irrespective of the fact whether you have paid it already or not, or whether you plan on not paying at all. Don't recommend that. But yeah, if it's relevant to your year, you put it here. If it's related to projects, that is. Then you have your RI membership dues. Again, only the part relevant to your year, right? So if you take this year, so when I say this year, I mean January 2023 to December 2023. So that payment has already been done by your IPPs, right? But your year only starts in July 2023, right? And it ends in June 2024. So for this particular part, I'm talking for your year, right? For your accounts. So it will be, so say in Jan 2024, you pay 100,000 as RI dues, right? So this is how much again in January 2024. Your IPP in January 2023 had paid 50,000 or 70,000. Okay, let's say 70,000. So this is how much you paid in Jan. So now in Jan 2024, you pay for January, for the year 2024, right? So your IPP in Jan 2023 paid for year 2023, right? But in both cases, what's relevant to you is only half of 2023, half meaning from July 2023 to December 2023. And from this, what's relevant to you is only Jan 2024 to June 2020. That's all that's relevant to you. Nothing more, nothing else. No. So it's So what you have to take, so this is a bit messy, but yeah, sad. So you take 50% of 70,000 and 50% of 100,000. Why 50%? Because what's relevant to you is only half of this year. What's relevant to you is only half of this year. So you only put 50% in the income statement because that's the only part that's relevant to you. 50% from 70,000 of 70,000 is 35,000, right? That's a 50%. That's what's relevant to you. Basically, to this part, you allocate 35,000, right? And from this 100,000, 50% is 50,000, right? So this is basically, these two values are the ones that are relevant to you. And you put here the addition of these two, 35,000 plus 50,000, 85,000, because that's the only part that's relevant to you. You can't put anything from January 2023 because it has nothing to do with you. You can't put anything from July 2024 because it has nothing to do with you. That's your successor. You don't put any incomes or expenses that are related to your successor or your predecessor. They have nothing to do with you. They don't touch anything of this. Okay, I'm guessing either. Okay, so if you all don't have questions, it means you're extremely confused, or I'm extremely good, but I'm pretty sure I'm not that great. So if you all have questions, please do ask. Yeah, so that's the mess that is RIDUs. And then you have district dues, which is very simple, 4,000 rupees per club, the end, that's it, right? And that is assuming you paid before the deadline. If not, you have to pay more. So please make sure to pay it before the deadline. I mean, Rotaract Reshaka would be more than happy to accept more, but yeah, please pay the deadline. And any other administration expenses, from printing banners to whatever administrative related things, from getting your annual report printed on glossy paper and whatnot. So all those administration expenses will be there. Whatever that's related to you and you alone, as in your year, that is it, right? And then so income minus expenditure, you get surplus or deficit, right? So surplus or deficit, that's relevant to your year, irrespective of the fact whether you paid your you made your expenses, or whether you've actually gotten money that you were supposed to get. Irrespective of the fact, this net surplus for the year, that's how much you should be having at the end of the year, right? Again, hoping you all don't have questions, or if you do, please feel free to ask. And then we go to the next format, receivables and payables. Again, I'm pretty sure you guys have now, hopefully, you all are very comfortable with receivables and payables. So this is basically a summary. So say your, oh no, Jesus. Okay. Right. Yeah. So name of the project, installation ceremony, how much money do sponsors owe you? You put that here. And then installation ceremony, how many people do you owe? You put that here. And administrative receivables, how much membership dues are you owe? And payables, let's say someone printed some documents out for you, and you haven't paid them back yet, and then you put that here. It's a payable. You owe them money, you have to reimburse them. So you put that here, right? And then you get the totals. So you get total receivables and total payables on this. So I and J. When we move on to statement of financial position. So now, so the statement of financial position mainly shows two aspects of an organization, which is mainly the assets, liabilities. I mean, especially when it comes to Rotaract, it's assets and liabilities is what it shows, right? So in assets, so receivables is actually an asset because it's money that you're owed. It's money that you're going to get. So it's an asset, right? It's, well, yeah, it's something good for you. Yeah, so it's money that you owed. So whatever your total receivables that we previously calculated, you put it here. Right? Say it's 500,000. Cash and cash equivalents. Cash and cash equivalents is basically the net cash that you have right now. When you open the drawer, how much of cash do you have that you can physically touch? And also in your bank account, how much cash do you have that you can immediately access? That amount you put here, right? And then you add those two up and you get your total assets, that and whatever other assets you might have, right? Right. And here you put the net surplus or deficit. So this amount we calculated from the income statement. So whether it's a surplus or a deficit, so you add it here. Yeah. And then, yeah, so opening balance of the administration account, like we spoke before, the administrative summary also, how much was there, how much did you have when you started your year in the administrative account, or the account that's, you know, separated for administration expenses, how much was the opening balance? And then according to the summary, how much of a surplus or a deficit was there for the year. And then you get the closing balance from that and you put that part, right? The closing balance, how much are you leaving behind for the next year? And then, so the same for project account summary, opening balance, how much you had when you started, how much did you add or reduce for your year, and how much are you leaving behind, right? And then liabilities, again, there was a summary, receivables and payables summary, and from that you get your payables amount. And accruals is basically pending expenses. So accruals are, it's like basically expenses that you have to make, right? So for an example, oh my gosh, can some Reshaka, can you give me an example? I know this. So basically
It's
stuff
like the
like,
audit fee.
yeah.
Yeah.
Yeah, like stuff like RI dues. So like I was saying, since because of the whole difference in the billing cycle of RI and our Rotaract year, meaning they then being from Jan to December and us being from July to June, there's going to be a weird point where it will come to a point where you have to pay them, but that invoice hasn't come yet, but that money, that payment should have been made in your year. So stuff like when, this is usually when the pro rata comes in, when the invoice comes at a point when that member had joined in a weird situation. Yeah. Yes, thank you. So we have an example of unrealized checks. That actually comes in, no.
That's
no,
under bank
that's
reconciliation.
not a accrual. That comes
Yeah.
in the bank cash reconciliation, which we will be looking at next. But yeah, so usually pending expenses are like stuff like RI dues. It's in that. But yeah, don't worry. It's very it's usually only that, no, Reshaka. Expenses, accruals.
Yeah, mainly
Yeah, because it's very
at the end of
specific.
the year, you guys have to do the audit. So audit fee related to URIA, but before doing the audit, you don't know how much would cost for the audit fee. So definitely you have to pay the amount in the next RIA. So here, let's say the last year audit fee is 20,000, then you can predict this time you will have to pay 25,000 for the audit, and then you can mention that amount as the accrual, and then after completing the payment in the next year you should have to check how much amount paid for the uh, uh, audit fee and then balance the accrual account.
Yeah. So basically, it's something like an estimate, a payment that you know you definitely that's very relevant to your year, but you haven't made it yet. Yeah, something like that.
So when recording that in accrual basis, so if you guys got confused and got problems, contact myself or Vinuri, so we could help you with that.
Yes, yes. Yeah, please feel free to reach out to them if you all have any questions. Then we come to the bank cash reconciliation. So this is basically about, so at the end of the year, when you get your, what do you call it, the bank account statement, the bank statement, so you'll realize that the balance that you have in the bank statement and the balance that you have calculated in your accounts is different for many reasons, such as if you issued checks. So this is where was it Mohidi? Yes, your unrealized checks comes in. So that is when you issued a check, but they haven't collected that, those people haven't collected from their end, so that money will still be in your bank account, right? But in your accounts that you have calculated here very nicely, you have already reduced it. You have already deducted that amount, but it still shows in your bank account because they haven't collected the money yet. So because of that, the balance in the bank statement and the balance in your accounts will be different. And for stuff like bank charges, so they only come up in your bank account, they automatically charge it there, so it will show up in your bank statement. So bank charges and yeah, it's mostly unrealized checks. And if you've been given a check and you've already added that, but you've never actually gone and collected it, have gone and deposited it in your bank. So there are stuff like that as well, right? So because of those reasons, your bank balance and your account, the balance that shows in your accounts will be different. So in this, the bank cash reconciliation, what it does is it takes, so in this, it takes the balances that you've calculated, right? So closing surplus of administrative account, closing surplus as per project accounts. And then, yeah, you add the payables and you minus the receivables. So in this, you add the payables because it's payables, that money hasn't gone out yet. But when you calculated these, you've already deducted it, right? To get those surpluses and deficits, you reduce those payables as if you paid, but you haven't paid. So you have to add them back in, right? And then receivables, you remove it because again, you calculated these two, like you've already gotten that money, but you have never seen that money. So you have to remove them, right? So then you get your total cash balance as per your financial statement. Cash balance, how much do you actually have? Then to that, you add unpresented checks. We're trying to get the bank balance. Bank statement, yeah. If you're adding it, that means, so unpresented checks, that means the checks that you have issued, but that they have not been collected from that end. So you have to add this particular amount to your cash amount, because in your accounts, in your financial statements, you would have already removed it. But for you to reach to your, so what we're trying to do is basically reach the bank statement balance by adjusting for whatever changes that are in the bank statement and your in your financial accounts. So yeah, so unpresented checks that you have issued, but they haven't been collected from the other end yet. So you add it back to your cash balance. Then you minus unrealized checks. That means you have deposited it. Maybe it wasn't cleared from the bank yet. It hasn't processed in the bank and it doesn't show in your bank account yet, but you have added it in your cash. So since it doesn't show in the bank balance, you remove it. And same as unrealized cash transfers, like, you know, when you do cash transfers when the banks are closed and they suddenly they're like, you know, we're not going to transfer this now, whatever. So stuff like that, it doesn't show, it hasn't basically, it's not reflected in your bank account, but in your financial accounts, you have already removed that amount. So stuff, so you have to basically, as in this is, sorry, not that. Cash transfer that has come to you, but it's not reflected, oh my God, reflected in your bank account. Right. Yeah, so those cash transfers you have to remove from your cash balance. And cash in hand is deducted. Right. Yeah. So cash in hand is deducted because obviously the cash in hand is not reflected in your bank statement. No, cash in hand is only in your financial accounts. So if once all of these additions and deductions have been made, you should, if your accounts are correct and you haven't missed anything, it all should come to the balance that shows in the bank statement. Right, so that is the whole point of the bank cash reconciliation. It is to make sure that your whatever your accounts, your financial statement balances and the balance in your bank, it actually matches up once you've made the adjustments for stuff like checks and unrealized cash transfers, cash in hands, payables, receivables, etc. So the whole point of this is basically to make sure that, you know, in a way, it's kind of to make sure your math is correct also. Yeah. Right. So these are those, I'm sorry, these are the formats. Now we move on to the last one, the monthly statement. So there's two statements. You have your income and expenditure and financial position. Now, like I said in the previous one, where the income and expenditure, the statement is, you will only put what's relevant to your year only. So yeah, same thing, but only for the particular month, the monthly statement, only for that month. Club dues that you have gotten for that month only. Whatever projects that happened in that particular month, put the income from those projects only. Say this monthly report is for July and you have a project in August for which you are asking for donations and those donations have come in July. Do not put them because they are not relevant, because their project is in August. You can put those in August. For this total project income, only for the projects that have been completed in July, that have taken place in July, that's it. Nothing from anywhere else, nothing from June, nothing from August, no, just July. Same for administrative income. Whatever meetings that were held, even if the meeting is supposed to happen in August, please keep it away. Only the stuff that are relevant to July. Right, so administrative income, same thing for expenditures and RI membership dues. Obviously, this part will only be relevant when you made the payment. Yeah, so till like somewhere in January, February, March, you're actually free of this. But yeah, yeah. So that's basically it's a smaller version of what you're supposed to do at the end of the year. Yeah, 1/12 of it. Yeah, then you also have the financial position, which is again, it's the same thing, but only for that month, right? So opening balance from the beginning of July and then closing balance at the end of July. Opening balance from the beginning of July, end of July, same thing. So payables that for projects that happened in July, accruals and blah, blah, blah. But the thing with the financial position is, so in this, so say a project took place in July, and those say you have payables and you haven't made the payment even in August, not at the end of August also, you have still haven't made that payment, then they show up in the in payables. The thing about financial position is, so while the income statement is for that, very strictly for that particular period only, financial statement of financial position is so like when you get to September, it should reflect July, August, September, that all 3 months. So in the financial position, you eventually, so you add up whatever from the previous month, it comes here, right? So it should basically it should reflect, it's like the journey so far kind of thing, but for finance. Right, okay, so here's a question. For multi-phased projects, do we consider the project dues for that project once all phases are completed, or do we take individual phases as a project for the monthly income? That is, I would say that's up to you all.
If the
Reshaka,
transactions are already, if the transactions are already happened, then those should be recorded in the accounts.
basically for phases, no, that it would be better for you all to record your incomes as per the phases, because if you all wait till the project is done, then high chances you would have lost the bills and forgotten all your expenses and why those expenses were made. It doesn't have to be a project. You can report it under the phases if they're
Also,
yeah.
Also, when the let's say there is a partnerships, and when the partnership get confirmed, even though project is not completed, when you are preparing monthly reports, you could include it in the income and mention it as a receivable. So include all the transactions, income and expenses related to the that relevant period, and if those income or expense not realized, you could mention those as receivable or payable.
Yeah, that. So basically the income statement, whether the money has come to you or not, and whether you made the expenses for that relevant month or not, you still have to include them in your income statement. The other question is, club t-shirt printing, does it come under administration account or project accounts? Club t-shirts would come under administration.
It also depends,
It depends
how
on
you
how
are
you all do
doing
it.
this. Yeah, so
Yeah.
if you are printing a t-shirt in terms of club administration fundraiser, then it should be recorded as that expenses and income should be recorded as recorded in the administration account. But if you are doing that for in terms of fundraising for another project, then it should be recorded under that project account.
Yeah, so basically it depends on how you guys are pitching that particular whether t-shirt printing is done as a project, or if it's done like he said, like Reshaka said, for administrative fundraisers. So there's a monthly reporting, any formats forwarded to president and secretary. I'm assuming you mean the financial reports. All these formats will be shared to you guys by the Rotaract district treasurers soon. Yeah, and we'll be sending it to the presidents and secretaries, so make sure to keep bugging your president and secretaries till you actually get it. Yeah, any other questions? So these are all the templates. You all have any questions, can drop in the chat box, or you can always reach out to us. Yeah. If a project started on last day of the month and the project ended on the first day of the next month, that expense would be in the next month report. Yes, it should be in the next month report, because in your project reports, you'll only be reporting it in the next month. No, that project is completed as one of the projects that happened in the next month. So along with that, the expenses or the incomes relevant should be reported in the next month. Any other questions? Right, bills and receipts, only soft copy. Can't we? We are going with the yeah. So the question is bills and receipts. So this person is asking whether the district will be providing us with receipt books. So we have given y'all the format. It's up to you all if you want to print a receipt book, but we have basically, we are going for the e-format in order to reduce the amount of printing. And in most cases, most don't use the receipt book at the end. So you guys can print the receipts if you all want, but the district will not be providing any receipt books for you guys. So bills, please maintain hard copies because you will have to present them to the auditor. If you all have hard copies, or make sure you guys take pictures of all the bills and maintain a folder separately to upload those bills as soon as possible so that you don't lose anything. Bills, we would recommend for you all to have hard copies. As opposed to receipts, that's up to you all. But no, the district will not be giving you guys a receipt book. But the format, I believe, has already been shared with you guys for the receipts. Okay. When a project is being submitted, does it need to consist of all these receivables and payables, expenditure, income, etc.? Project report. So in that you will have a particular part to include all your incomes and expenses. It would be good for you to include everything. I don't see why you wouldn't, because if you do not include everything, that would be a bit suspicious. But if it's better if you include everything. We were told. I'm sorry. I believe, your access to RMIS was already shared. Okay, so Yasindu, are you a president? So the president and secretary would have already been given access. The logging in details were already shared with the presidents and the secretaries who have given us their details, their emails and whatnot. The digital services team shared RMIS access a couple of weeks ago. But yeah, if you are either a president or a secretary, please drop me a message and I'll we'll talk about how you have not been given access. Sorry about that. But yeah. Any other questions related to the okay, is there a handbook available for the club treasurer and can explain outstanding subject? Yes, the handbook, yeah, we'll be sharing it with you guys soon. As in basically a complete handbook of all the things that you need to know. We will be sharing it with you guys very soon. Is there a specific date to make the transfer bank accounts? Yeah. So basically, you have the deadline to do the transfer of signatories is the 31st of August 2023. And yeah, how to do it? Why don't I now? It's getting very treasury for me. So yeah, I'm gonna hand over the floor to our wonderful district treasurers to take over the very, very treasury questions. Yeah, Reshaka, I sent you the question. Yeah. Is Reshaka there? Or Vinuri?
Yeah.
Oh, okay.
Yeah,
I'll send
go
it
ahead.
to you.
My laptop got stuck.
Reshaka's there.
No, I can't see the question because my laptop got stuck. Vinuri, can you go ahead?
Okay, I'll send it to Vinuri.
Yeah, sure. Okay, so the question is that is there a specific date to make the transfer of bank accounts from the previous treasurer to the new one, and how does it work? So like Methini said, the deadline to change the signatories to the bank account is the 31st of August this year. And how does this work is like from this will actually depend on the bank itself, because the requirements of the bank to change the signatories varies from one bank to another bank. So make sure that like you communicate with your IPPs and the whoever the personals who are holding the signatories for the last year, and they have to provide the documents from their end. Like you should communicate with them, and they should provide the confirmation and the necessary approvals from their end, so that the bank will approve the new signatures for the club account. So before going through the procedure, make sure that you contact the bank in which the branch itself, where your bank account is have like you are having the bank account. Then ask for the necessary documents that they require, because with all these taxes and stuff going on, like the required documents have also changed from last year to this year as well. So communicate with the bank also, and be prepared with whatever the documents that they are requesting. And if you go prepared, then you can actually easily get it done within 3 to 4 hours. Anything else?
I haven't gotten anything other than that. But yeah, about the signatory transfer, it really depends on the bank that your account is in. Each bank has its own weird little processes. So it's always good to actually go and ask them what the process would be. And you can also ask your treasurers, as in the previous treasurers.
Yes, like don't, yeah, because like don't blindly trust that whatever the documents that you have provided last year will work this year also. Because like sometimes, let's say like last year, if they have provided letters with the signatures, this year the bank is specifically ask you to provide the documents signed physically. And you must have, some banks requires the signatories from the entire the authorized people from the last year plus this year also, everyone. So it actually depends on the bank. So it's better that you cross check with the bank before like you actually go through the process. And one small thing that I also want to add regarding the opening balances, like if you really went through how Methmini described out all these reconciliations and stuff, you would have realized that the opening balance, it's something like really important, because like if you mess up the opening balance, then the entire accounts will be wrong, right? So one way that you can actually have that opening balance correctly is that from, you know, that the last year, for the last year, the accounts that the IPPs are submitting the accounts for the last year as of 30th of June to the auditors, right? So in that audited report also, you get the closing balances for that specific year, which means as of 30th of June 2023. So the closing balances will be your opening balances when it comes to the RI year 23-24. However, in that, if the clubs are maintaining only one bank account, let's say you don't have two separate bank accounts, same project and admin, right? So in that case, everything related to the projects plus the admin account, everything will be in the same bank account, right? So all the transactions will be done by that account. So make sure that you always separately maintain the transactions related to the admin account separately as cash admin account balance and bank admin account balance. Likewise for the project accounts also, so that it will be easy for you to maintain the monthly accounts as well as when you are doing the reconciliation at the end of the year as well. Anything else, Reshaka, that you want to add?
No,
Yeah. So if so, like I think we have almost taken 2 hours of your time. So we can wrap up the session, and if you have any questions or clarifications regarding anything else, you can always reach out to myself, Reshaka, or you can email us through the Treasury email as well. So over to you, PDT.
Hi, so I think it was a very valuable session to all of you. So before we end this session, shall we all switch on your cameras to take a group picture? I think we can take the photo, Nathan. Yeah. We'll just wait 1 more minute. I think some people. Yeah. Okay. So like in 3, 2, 1, let's take the picture. Okay. There's 4 pages, so keep smiling. 3, 2, 1, cheese. Okay, cool. Let me just check. All right. So thank you guys for participating in the session and hope to see you soon with another Avenue District training session as well. Good night, all.
thank you. Good night.
Thank you. Good night.